and welcome back to Cheeky Crypto. My name is Nick, and today, guys, we're going to be talking Bitcoin. There's some interesting things that have been developing and going on in the background, specifically from a technical analysis standpoint. So we are going to be taking a look at the charts first thing in this video, and then we're going to jump into the news and the data and see what's going on there as well. Now, as I get into the video, if you find it useful and informative, smash that like button. I do appreciate that. If you are new to the channel, then why not go ahead and subscribe, tapping the bell, selecting all the notifications, and you will not miss another video update. If you haven't yet joined us in Discord, what are you waiting for? Check it out. Link is in the description down below. It's a fantastic community talking crypto 24/7. It's completely free, and I don't think you'll be disappointed by what you find down there. So why not go ahead and check it out? Let's jump right down into this video for today and start taking a look at what's been going on with that price action. We're going to start things off on the 1 hour time frame. This is Bitcoin paired up with USDT, and we're using the BitGet spot exchange. And so following on from yesterday's video, as predicted, we did actually hit the X-Wave high right into our range here, 29,713 to 29,778, and then we came down into our Z wave between 29,099 to 29,467. We're not done yet though, so let's go ahead and just tidy this up so we can see things a little bit easier. And what we'll do is we can see that we came down through this lower range or the higher range just here. We can remove that one now, and what we can do is we can reflect on this move in here. It looks like we still have a little bit further to the upside. Potential double top would be our minimum expectation. That comes in at 29,496. Okay, so that's going to be our minimum expectation. More typically, though, we would be aiming more between the 1 and the 1.236 fib scale, which would put us right about here on the 50 EMA, just above the 50 EMA, so a wick there and rejection, basically coming in on the 29,500 to 29,550, right? So that's going to be the range there for a 3-wave pattern, which would be our B wave. We wouldn't trade this one, and we'll talk more about trading opportunities later in the video, but it looks like that's kind of where that's going. And then from here, we would be looking for a move to the downside. I'm going to put it on the higher range here, just to give us the low expectations, which basically means we're looking to extend down into the deeper range of our Z wave, putting us at 29,158 potentially. Okay, so that will be basically looking like a big A, B, C structure like this, getting us down into the range, which will then complete out this 3-wave pattern here, W, X, Y, X, and Z. And then from there, we can start thinking about a reversal, which is looking good and healthy. Nothing wrong with that. So we've hit all of these kind of expectations as we would normally kind of think of them. So all that's looking pretty good. Found good support on the 200 EMA. Looking to kind of get rejected on the 50 EMA as we kind of wick up a little bit further there. Minimum expectations, 29,496 to the upside before collapsing down into these low expectations. Again, double bottom would be the minimum, which should put us basically 29,344. We've got to be that or lower in order to kind of complete out the C wave, which will then complete out the Z wave. And so we're actually in the kind of zone here. So if we wanted to go long on the market, obviously we're going to have to do that later. And if we're going to go short on the market, we can't do that right now, not without good risk management and all that kind of stuff. But we'll talk about the trading opportunities later in the video, right? So the hourly chart is looking pretty good. Nothing terribly too unusual, kind of following the TA as per yesterday. And we're just coming down slightly deeper now because our structures here are indicating that we have to. Okay, so that basically will mean that we'll lose support around the 200 EMA, will come down, and then we'll be looking at trying to push up higher than that 200 EMA again. So let's go ahead and take this up into a daily time frame. Okay, so the daily time frame here is looking interesting. It still, to me, looks like we are ready for that break upwards. As we were kind of talking previously, we have the lower highs and the lower lows. These do have a tendency to want to break on upwards. So nothing unusual here, but we have, of course, moved up quite aggressively on the stochastic RSI. This, to me, tells me that we're probably going to have to break down further before we can kind of start thinking about that move upwards. Okay, so basically there hasn't been a lot of interest in Bitcoin. As such, the volumes are low, and as the volumes are low, we can see that the momentum indicator is rapidly moving from oversold to overbought. okay? So we could probably be looking to test that higher range on the trend line one more time or so and get us up into the overbought range. I don't think we're going to see a break upwards until we've probably tested down in the low ranges again. But I still see this as a bullish break to the upside at some point, but probably going to have to kind of see a breakdown before we can break on up. Okay, I still think we have the possibility of those higher ranges of 34, 35k, potentially even pushing as high as 38k before we break on down. Of course, we are concerned over the potential lows coming down more towards the 200 EMA and finding that as our support. That's going to put us at around the $27,000, but even possibly break down deeper than that. More towards the $20,000 CME, but for now this actually isn't terribly too bad. It is what it is, and we can start thinking about where our next kind of major levels of support are to be found, and for the most part you can see them in here. Pull this across, right? This previous area of resistance coming in here is kind of where we're going to have to kind of look, in my opinion, for a nice healthy retracement. We don't have to come down deeper than the low that we had over here at $28,500. We don't have to do that, but for the most part, I suspect we're going to have to kind of lose the support of the 50 EMA briefly before we can start thinking about a move upwards. In the same way that we've moved the stochastic RSI from oversold to overbought like this, we can do the same in reverse. A small dip could be a massive correction here. Okay, it all depends on how much selling pressure there is, if there is any at all, right? And so we have to kind of keep a close eye on it. Now, from a volume point of view, you can see here just how lackluster the volumes are. They're just decreasing, right? There's not really much in the way of volume at all. If you zoom out of this thing, you can really see over the period of time here how the volumes are just really, really pathetic. And so it's not overly that interesting. We had obviously increased pressure when we sold down into the lows. And as we start moving up here, the volumes are just down, right? They're not high. They're not like they were in the previous bull market, as you can kind of see over this side. In fact, if you can take a look here, volumes of 2020, March 2020, right? And lots of people are speculating that, we're kind of looking at these fantastic high prices. We're going to go parabolic on the price, right? Yet the volumes are like this. You can see the volumes back in 2020 were very significant. And of course, if I just bring this across to where we are now, you tell me, does it look like there's demand for Bitcoin? Does it look like Bitcoin is in a bullish market when the volumes are this low in comparison? It doesn't look and doesn't give me and encourage me to kind of think that that is the case. Now, from an RSI point of view, it's kind of dipping down quite well. There's not much more to this one at the moment. I mean, if we take a look here, we can see that price is kind of pulling back down into these areas, and the RSI is pulling back down into these areas as well, but we're not quite where it needs to be in order for us to kind of get that break upwards, in my opinion. So still some work to be done there, and there's nothing major on the divergence indicator at that level either. So let's go ahead and take this up into a weekly time frame. Here we can see that this is the futures. CME futures, but just got on the weekly rather than a daily because we have got highlighted 3 CME gaps. We obviously have the one up here at the 34,455. We have the one down here at 20,330 to 21,110, and then we have the lower one at 9,665 to 9,925, right? 3 CME gaps. And for the most part, CME gaps that appear in the price chart do usually get filled out. And so we look at these things and think, okay, there's a potential break upwards here. As we can kind of see, we're just testing this low trend line at the moment. If we lose this low trend line though, I think that's going to give us more of a catalyst to the downside than the upside. However, if we can get bounced from here, we can take out that CME gap, and then I do think we're going to have to come down into this low range as well and finish off that 20,000 CME gap. It is still up for debate as to whether or not we go for the low one around 9.5, but it is what it is, right? And we can see within the price action here. You can also see that our weekly stochastic RSI is correcting down quite nicely at this point after a few weeks of kind of just like ranging market, just kind of going down into these areas. And again, like I said before, this lower highs and lower lows does have a tendency to want to break on up. We're not quite in the oversold area on the weekly, but we are likely to get there soon, and I think we are going to have a break upwards in the coming weeks and months, right? We can kind of see that within the data there. Now, outside of our I don't even know where they've gone. They've disappeared there. I was going to say outside of our stochastic RSI, what else is going on? But we can't really see or have the visibility on this particular chart here. So what I'm going to do is I'm going to take this over and I'm going to put it into the Bitcoin USDT. And we're going to see what else we've kind of got going on here. We haven't actually we've got volume down here at the bottom. So you can see the volumes on the weeklies just not really being anywhere near where they need to. For the most part, not giving us a huge amount of confidence in thinking that the price action here is going to be impressive, right? We can see here pretty much since the 13th of March that all these moves to the upside here are literally, in my opinion, just about grabbing liquidity. Volumes were increasing, volumes were looking okay, but they've just completely died off. And they've died off very much so since the end of March all the way through to where we are today. And not a lot going on the weekly time frame there to give us kind of confidence from a volume point of view. In fact, what I will do is I'm going to come back over here and go to our weekly time frame, and I'm going to throw in that divergence indicator, throw that on there. You can see that we've got some bearish divergence in here on the weekly time frame as well. Okay, you can see that right inside there. So we are looking at this, okay, as in the RSI's come down. Okay, so we're losing momentum as price is going up. So everything that I'm telling you here, guys, is essentially that there isn't really a confidence to be seen in this market, right? We have the bearish divergence, basically higher highs in price, yet we have lower highs on our RSI. Again, that's indicating to us actually there's a lack of momentum as price pushes upwards, and this is a reversal that is due. Okay, so we know that on our daily time frame, for example, those are the things that we're going to be looking for. But overall on the weeklies, I think we are looking pretty decent, and I think we are going to be looking for a break to the upside in the near future. But this is all to be short-lived, because I do suspect that we actually do have to have a nice healthy correction towards the $20,000 area within the price chart. Okay, so let's go ahead and bring up the data aspect of things then. So for those who know, membership.𝗕𝗘𝗪𝗏𝗀𝗀𝗧𝗏, link in the description below, is our membership website where we do offer a 7-day free trial across all of the various different plans. These plans will give you access to exclusive video content, written article reviews with scores and ratings against different cryptocurrency projects, all the way through to course material on how to understand Elliott Wave theory, smart money concepts, how to trade with them, into the data zone where you have Bitcoin data, Ethereum data, Cardano data, XRP data, and I will continue to add more to this list as well, all the way through to so much more, right? And all these plans are found at membership.𝗕𝗘𝗪𝗏𝗀𝗀𝗧𝗏. You can customize them and things like that as well. So check it out. 7-day free trial. What have you got to lose? Now we come here because we're going to be taking a look at the Bitcoin data, and the Bitcoin data has or is basically exclusive to us through what we have here. Now these are things that I have personally created, and so let's go ahead and go to the Bitcoin data here and just bring it up, right? So when I say no one else has these, no one has these exact reports because I made them, unless of course they're copying them from me, but you never know. But for the most part, no one else has this. It's completely exclusive to us. Now I will be customizing and adding a lot more on-chain data to these things as time progresses. It's been a very busy 6 weeks or so, so I'm going to be getting back on this hopefully in September. Once we kind of get through August as well. But for the most part here, we've got some really interesting on-chain data that can help you understand, outside of just price action, what is going on when it comes to Bitcoin, right? And so in here we have the overarching stats. This is just a big overview on what's happened in the last 24 hours with BTC, essentially, right? We have a circulating supply of 19,453,000, and there's only 21 million, right? So there's only really 2 million. It's not even that, it's 1.5 million to go, right? So we have to think, does the Bitcoin halving really have an impact? It's not going to have a big shock to the supply anymore, right? So Bitcoin halving is irrelevant in my opinion now, has very minimal impact on price. It just has a great way to kind of get some headlines out there and trying to trick retail investors into thinking that it's going to be the catalyst of a big bull market because of Bitcoin halving event. Halving the new issuance of BTC is really minimal. Now there's 19.5 million BTC out there. Okay, halving the amount of new Bitcoin really is not going to be a catalyst anymore. It's all about supply and demand, and there's 19.5 million out in circulating supply. So we really need to focus on what is going to shrink that supply and not what's going to potentially grow it by 1.5 million. Okay, because it really doesn't make that much difference anymore. Now, when we start thinking about this all-time high at 69,000, it was 638 days ago. We can argue maybe the bull market started. Maybe it hasn't started. I mean, we're partway through here, but you never know. We're currently down 57% from that all-time high, and there was a 1,012 BTC issuance in the last 24 hours. So an extra 1,000 Bitcoin was issued. The hash rate is down there at 367,000, as you can kind of see. Fees were $875,000 for 332,000 transactions, which is not a lot of transactions and quite a hefty price that's associated with it. Not as expensive as Ethereum, but nowhere near as cheap as things like Cardano or XRP. XRP, right? And so we have some interesting data, but we obviously have exchange-based data, inflows and outflows, all those kind of things. I'm going to look at kind of redoing this one, which is why I haven't been talking about this all that often. I had to change data source on this one, which is why you see this big drop right here. And this isn't actually then giving us anything overly useful across a 365-day view. But if I were to change this to, let's say, the last 3 months, then we end up in a more interesting position, but it's still not good. Let's actually just take a look at it from the last 1 month. In here, you can kind of see we've had some interesting kind of movements in the amount of Bitcoin going on and off exchanges and so forth. But for the most part, I think I'm going to redo this one. Over here, we have liquidations in the last 24 hours, $6.9 million of liquidations in the last 24 hours. This actually updates every single hour. So you can see like a rolling 24-hour period. So you can always keep up to date with what is going on. And you can see the last updated here at 6:22 a.m. UTC. Okay, you can also see that we have a list of exchanges with their liquidations, right? So OKX is the top exchange with the most Bitcoin liquidations at 2.1 million. Binance also sits at 2.1 million. We have Bybit at 1.7 million and 𝗕𝗘𝗪𝗧 here at 773,000. Everything else is really kind of non-existent. So from a percentage point of view, we can see that OKX is 30% of liquidations, Binance is 30% of liquidations, Bybit is 25%, and 𝗕𝗘𝗪𝗧 is 11%, right? Everything else is kind of non-existent. Now, essentially, 73.57% of positions were long positions that were liquidated, and 26.43% were short positions that were liquidated. So for the most part, people going long on Bitcoin were the ones getting wrecked in the last 24 hours, and there's a few short positions in there that probably just didn't have their stop losses in the right places. Also, are not appreciating that you have to kind of move in both directions in order to move at macro level in one direction. You have to see kind of a few bounces in places, right? And that can sometimes trick people if they're trying to basically short whilst the move is going to the downside and not appreciating there's usually going to be a bounce upwards before it continues its move to the downside. So you can understand that some uneducated retail investors are probably getting liquidated by just gambling on whether things to go short or to go long on the market. From a wallet data point of view, though, we can see some interesting things as well, right? So in here, we have 10 different sized Bitcoin wallets, everything from 0.001 BTC all the way through to 1 million BTC per wallet. Okay, now obviously, there's no wallets with over 1 million BTC. Okay, these are starting really from 100,000 BTC, and there's 4 of these, and they've been 4 for a very long time. There were 5 a year ago, now there are 4. These are your micro strategies, right? If we take a look at the 10,000 BTC per wallet, though, here we can see like what we used to call the Kraken, and they have been basically setting off in the last 180 days, right? In the last 365 days, they had been accumulating. They were 9% up, right? But over the last 180 days, they're down 5.26%, if I can talk today. And in the last 90 days, the last 3 months, they're down 6.9%. So you know that they've been aggressively coming out of their positions, selling into this move to the upside, right? The orange line is the price. Okay, so the price has been going up, and these guys have been selling into it. It tells you that essentially it's just about liquidity grabbing. If you remembered what I was saying earlier about how I thought the price action to the upside with the volume being as low as it was all about just grabbing liquidity, here you can see it also with price going up and wallet counts decreasing. It's about taking liquidity out of the market. Now, typically you take liquidity out of the market during bear markets, not in bull markets. And for the most part, these particular types of wallets are usually used, at least historically speaking, to control the flow of Bitcoin, right? They flood the markets and so forth, and they basically can see from 2018 here that it accumulated during the bear market, and then they flooded the market into the bear market low, right? So this huge drop here, okay, happened just before the 2018 bear market low point. This huge drop over here is them taking profits as they go up into a new all-time high. They then accumulate all of this move to the downside here, and they start selling off as price moves upwards, okay? Now, if I take it to the whales, 1,000 Bitcoin or more, you can see it's a very similar story. They are down 6.19% in the last 365 days, down 1% in the last 180 days, down 0.64% in the last 90 days, down 0.74% in the last 30 days. They've been aggressively selling off their positions in the same way that we had seen with the Kraken size wallet earlier. However, they haven't been accumulating during the bear market. They've just been offloading. Every potential push to the upside they have used as an exit liquidity. They were selling in the lows of January 2022. They were also selling into the highs that we saw up in April of 2022. They were selling down in June 2022, okay, even all that move upwards in August of 2022, when we were last told by many of those influencers across X or Facebook and YouTube, basically the bottom was in back in June 2022. And for some, it looks like it was the case, but for many, and including Bitcoin here, it wasn't. And in this particular time period, we saw as price was moving up, these guys were aggressively selling into that move to the upside, right? And then we come down into the November lows. And what's happening? Well, these guys are still selling. They're selling into the November lows, right? And they're selling into this move upwards as well. They're continuing to sell. So there isn't a lot of confidence to be seen here from the whales. They basically are still using the market to exit their positions and basically transfer the Bitcoin to unsuspected retail investors, which if we take a look at the one Bitcoin or more, you can see they've aggressively been buying up every dip during this bearish market, and they have yet to see any kind of selling pressure. Now, we saw something very similar back in 2018, where we actually then started to see them selling towards the end of the bear market. After spending premium prices or buying at premium prices on Bitcoin during the bear market, they succumbed to selling pressure right towards the end and into the actual bear market low. Okay, so at the moment, we can see no selling pressure during this entire bear market from these retail investors that have at least one Bitcoin. And I think at some point we are likely to see that reversal in the market because these guys will succumb to selling pressure. There's over 1 million wallets. I suspect we have to drop down to maybe 800,000 before we actually start to see a reversal in the market to the upside of a bullish market. But that's where it sits. You can see here they're up 13.32% in the last year, whereas our whales are down 6.19%. Right, we can also take a look at smaller wallets if you want. They're up 17.95%, even smaller than that, it's up 14.99%. So essentially you can see that whales have been selling into the retail sized wallets. Okay, and again, that's a recipe for, in my opinion, for disaster. Moving over into some interesting stuff though. So a Bitcoin ETFs to push US slice of crypto ETF trading volume to 99.5%, an analyst. Now, I'm not so sure about this. I think this is just how do you get a catchy headline and all these kind of things. I think that it would be very impressive, not impossible, but incredibly impressive for Bitcoin ETFs globally to sit 99.5% of the volume in the US. Now, I think it can get very, very good volumes, maybe 90, maybe 95%, but 99.5, I think, is a bit ambitious. So you can kind of see what the people are anticipating. I think there's going to be a cascading effect here though, right? And so if you just take a look at the applications of spot ETFs at the moment, and that's going to be great from a US standpoint, right? You can see all these things. If they all got approved, sure. But you also have to understand that maybe other countries will then start listing spot ETFs as well. Once one gets approved, you kind of start a cascading effect. That actually might mean that the 99.5 would just be non-existent, because actually that pie starts to get divvied up between more countries later on. So I wouldn't mind it, but I think it's a bit ambitious and very heavily speculated there. I don't think it's going to go as high as that, but I'm also a bit of a realist or pessimist depending on how you want to look at it. Ultimately, it's interesting. I don't think that we're going to see a Bitcoin spot ETFs under Gary Gensler's watch, so he'll have to go first in my opinion before we see that. And again, I've spoken about it before. The big concern I have is that the spot ETFs get rejected initially, and we see massive downside before we actually see a spot ETF get approved under a second application, not under Gary Gensler's watch. But it'll be interesting to kind of see how it unfolds, because we never know, right? We all want these things. We all want a Bitcoin spot ETFs to kind of get approved. It would be a massive catalyst to the upside, but we need to see how things unfold. It's not the first time we've seen these things happen. It's the first time we've seen BlackRock kind of apply for such a thing, but it's not the first time we've seen Bitcoin spot ETFs get or applications go in and then get rejected, right? We've seen them years and years and years. So it's one of those things. We'll keep a close eye on it. 99.5, I think, is a very ambitious target range. Now, as we kind of move on to the next section of exchanges, as I kind of talk about all the time, during bullish markets, let's say we do see some spot ETFs get approved, we're going to want to make sure that we are ready, right? And we're going to make sure that we are familiar with the different exchanges out there. There are many different types, right? We've seen Coinbase listing their native blockchain, the first public company to do so. We've seen Binance having a lot of FUD recently and getting attacked by the US government. We see 𝗕𝗘𝗪𝗀𝗧𝗃 as potentially insolvent. There's rumors flying around that. So when it comes to cryptocurrency exchanges, there's lots of things to kind of consider. Personally, I make sure that I sign up and register to as many as I possibly can, and I get familiar with how to use them. How do I move money to them? How do I take money off of them? What kind of trading opportunities are there? Do they do leverage-based trading? Do I fully understand the risks of leverage-based trading? And is there education? Is there paper trading? All these kind of things, right? So for me, I found that BitGet is my go-to platform. I use BitGet for 90 to 95% of my spot buys, and I use BitGet for 100% of my leverage buys as well, right? Or trades, I should say. And so one of the things I say here is I have an account with Binance, Coinbase, Crypto.com. What else have we got? KuCoin, Gate.io, BitGet, Bybit, and so forth, right? And so what we do is we basically get familiar with the platforms and use them all. So as I said, BitGet is my go-to platform, and all these others are my secondary backups, right? And so if you haven't yet signed up to BitGet, guys, or Bybit, or any of these other exchanges, then why not check them out? The links are in the description below. Now, BitGet are offering up to $8,000 of rewards depending on how much you deposit and trade on the platform. So you can check that out. Why not? What have you got to lose, right? Links for this is in the description below. Ultimately, it's a good idea to get familiar with these platforms, how to use them, how to deploy funds on, how do you do fiat deposits, how do you do crypto deposits, and how do you withdraw crypto, and how do you deposit to your bank, all these things, right? So get familiar with it, sign up to BitGet using the link in the description below, take advantage of the offers that are available, and get familiar with the platforms, because when these spot ETFs do get rolling, things are going to get very crazy very fast, and we're going to see some really massive moves to the upside, which you might want to be in the position to sell. And the only way you're going to be in a position to sell is to be familiar with the exchanges that you're using. Sometimes the exchanges that you're really familiar with at the moment, whether that is 𝗕𝗘𝗪𝗀𝗧𝗃, Coinbase, Bybit, Binance, whatever, right? Some of them might be really difficult to log on to because there's such high demand. The servers might be down and you might not be able to log on fast enough. So making sure you have access to more cryptocurrency exchanges is a really good idea, and it sets you up for success in the future. BitGet is my go-to platform. I think if you were to sign up to BitGet using the link in the description below, I don't think you'll be disappointed by it, but do check it out. Make sure you do your own research and understand the risks involved in trading as well. I'll leave that section right there. Let's jump back down into the world of trading though, and we will talk about trading setups, but before we do that, I think we're going to also kind of just reflect on some of the recent movements in our Discord. So in here, we can see we've had a couple of really interesting trades on Bitcoin short at 42.94%, and we have a SHIB short as well at 10%. So some gains were made yesterday, but it was quite a quiet one from a trading point of view. Let's go ahead and actually talk about what I think I would be looking at over the next kind of 24 hours or so. So let's go hide that one down. What we'll do is we'll come down into our hourly. So as I was talking about earlier, right, we're talking about a potential move up here with a double top scenario. Okay, we are looking for a move up into this range. Now, this is not worth trading, so we're looking at $29,500, right? We're not looking at kind of coming up into this and going long on the market. Instead, what we would do is we'll be looking for a short position within this range, right? So the double top is my minimum expectation, so that's kind of where I would want to put my short position. I'd kind of want to put it in here. I'd put the stop loss. I'm going to put the stop loss, probably give it a bit of a wider berth up here, okay, so we can see, and then I'll be targeting out that minimum down here on the double bottom, right? But we of course have our target down here as well. So we'll look at this and we'll see, okay, well, that's actually a 1.87. That's actually a pretty decent risk reward ratio. If we come down here into that actual range that I think we're likely to go to, then we're talking about a 4.17 risk reward ratio. So from shorting the market, that's kind of my approach to this. We might even give this a little bit more of a wider berth and try to get it above that swing high. It doesn't give us a good risk reward ratio if we we do that. So we're going to want to try to get this into a good position. I think if we can get this to around here, this will basically put us above this swing high. That would put us at about 29,664 on the stop loss, with a market entry, or I say market entry, but entry on the double top at 29,496, with our TP being down here on the low side at the 29,158. That will basically give us a risk reward ratio of about 2.01. Good risk reward ratio, good returns on that one, because I do think this is the most likelihood scenario. I think we are likely to come on down into this range. So from a shorting point of view, that's kind of how I'd look at this one. From a trading Bitcoin point of view, that's kind of where I think things are likely to kind of end up, and something that I think is likely to play out in my opinion. So guys, I think I'm going to leave this video right there. If you have found this useful and informative, smash that like button. I do appreciate that. If you are new to the channel, then why not go ahead and subscribe, tap the bell, select all the notifications, and in doing so, you will be kept up to date with everything that we do here at Cheeky Crypto. Just bear in mind, I'm not a financial advisor. Nothing in this video should be considered financial advice. It is for entertainment purposes only, and just represents my personal thoughts and opinions on the market and the data as I personally see it. I'm going to leave the video there. If you found it useful, you know what to do. Subscribe. Don't forget to join us down in Discord, and I will catch you all in the next one.